Numbers alone can be misleading. Sometimes they even hide the real performance. But the moment you compare them across companies, they start revealing the complete story. Hello everyone. Today we're going to look at another very important topic, a topic that you'll use again and again in financial modeling, that is comparative case study. In this topic, we'll actually study the real numbers, the actual financial data of different listed companies. We'll report their financials, and once we have those numbers recorded, then we'll study them deeply. Now, if you really want to compare two different companies, this model will give you insights in a very powerful and effective way, much better than the traditional comparable methods. It lets you compare each and every line item of the financial statements with a full timeline of 7 to 8 years. Look at this. As soon as I select a company, the entire income statement updates instantly, along with all the ratio analysis linked to it. And the same thing happens on the balance sheet side. Every single line item for both companies updates automatically. It even reports the sensitivity analysis of a stock in just a moment. Now here's the exciting part. We actually have two timelines in this model. The first one is the annual comparison, year by year performance. And the second one is the quarterly performance, analyzing how the company moves every quarter of the year. This gives you a complete dynamic and very clear picture of how companies perform over time. Alright, now when it comes to the agenda, we have several key objectives. The first one, forming a centralized database for analysis. This database will follow a proper structured format where we'll report the actual key financials of various companies. We will carefully review those company financials and enter every relevant facts and figures into our database. We'll also talk about why this database is so important. In the database, we'll start with an entry number right at the beginning. Then the next column will be the quarter end date, because financials are always reported quarterly. Each quarter's results, first, second, third, and fourth, will be included, along with annual financials. For example, if the quarter ends in June, it's June 30. If it's March, then it's March 31. And if it's December, then December 31, that's the end date we'll mention. Next, we'll have a column for the company's code or symbol. Every listed company in the stock exchange has one. For instance, Maple Leaf Cement, Fuji Fertilizer, Engro Fertilizer, and you can say Oil and Gas Development Company, all have their own unique codes. We'll record those symbols here. We'll also note the quarter number, whether it's the first, second, third, or fourth quarter. For example, if the first quarter ends on September 30, then the second quarter might end on December 31, right? Sometimes one company might have a June year end, while another closes in December, and that's completely fine. We just need to mention the correct quarter number for clear comparison. Now look at this. Once we start building our database, we need to bring all the key financial data into a proper structured format. First, we report the sales number, that's a hard-coded figure. Then we report cost of sales, again a hard-coded value. After that, we apply a simple calculation to find the gross profit. Here, gross profit becomes a calculated field. Then we report SG&A, and from there we calculate the operating profit. Next, we add other income and other expenses, and this leads us to one of the most important numbers, EBIT. So basically, every income statement line item is reported, but in a very structured analytical way. Now, the same approach goes for the balance sheet. We list all the major line items: equity, non-current liabilities, and then current and non-current assets. Inside these, we also include important subheads like trade payables, stock in trade, trade debts, and so on. Additionally, we'll report dividend payouts, the market closing price at that time, and the last trading day information. Now, you might be thinking, why do we need this structure? It's simple. If we want to compare multiple companies quickly, we must have a clean, consistent, structured database format. Only then we can perform comparisons within the same sector or even cross-sector analysis without any difficulty. So the first step is clear: report the actual financial data in a structured database. And once that is ready, then we move toward linking our reports. Like income statement analysis and balance sheet analysis, using dynamic formulas that update instantly. Look at this. We can compare two companies very easily. We'll check how sales are progressing for both companies. What's the cost of sales? And we'll analyze every single line item of the income statement. We'll perform ratio analysis. And yes, we'll compare those ratios between two companies, whether they belong to the same sector or even completely different sectors. Now see this. If we put a different company here in company A, the whole data will change instantly. And now we can easily compare it with company B, even if both sectors are different. Even if both have different year-end dates, still, every line item becomes comparable. We will also perform vertical analysis, horizontal analysis, and trend analysis in this section. After that, we'll go toward balance sheet analysis for the same companies. In this section, every line item of balance sheet will be compared, how current assets and fixed assets have moved, and how liabilities are changing over time. Again, we will perform vertical analysis, operating efficiency ratios, and profitability ratios, and you can see they will be compared very easily. And now the most important part. Yes, the most exciting one, valuation ratios. Here we will check earning per share, price to earning ratios. We will compare enterprise value per share and book value per share, and many more powerful indicators. Once you build this model, you can dynamically analyze the financials of multiple companies just by entering the company code. That's it. Look at this. I just changed the company. And yes, all the information from the centralized database updates instantly. And it gets even more exciting when we compare it with benchmarks, like the KSE 100 index. Next, we have some graphical analysis. Then we'll again perform the same comparison, but this time the timeline is different. Here we will compare quarterly performance of companies and analyze the trailing 12-month TTM performance, including the most recent quarters, whatever it is. All right. Some charts and graphs are also linked to show quarterly movement analysis. And here we need some additional databases like daily stock prices of listed companies and daily KSE 100 index data. So I'm sure that you will learn the most updated and structured models here that you have never heard before.